Good afternoon and welcome to the end of day review for today. And today is Friday, so it's a last trading day of this week. And this week we don't have much high impact news, but the market provide plenty opportunity to get a right, to make money. It provide plenty and generosity to make money if we get a good move right there. And we are finishing week 42, which is the earnings season for the quarter three right there. And next week, week 43, we're gonna have more earning coming for next week, and the final week of October we will have Google, Amazon, Microsoft, Apple, and they call Magnificent Seven. Magnificent. Oh, we have a hard time to say that word. Stock Mac Nif yeah, right there. Magnificent Seven. That's Magnificent Seven. Wow, that is right there. Yeah, let's try it. See what's the allow. Okay. But anyway, Magnificent Seven stock, which is this seven, big tech big tech company. You have Google, Alphabet, Amazon, Apple, Facebook, Microsoft, Nvidia, and Tesla. Magnificent Seven. Yep, they're gonna be huge. Next 2 weeks, see how this close out on October. And then at the end, the final week of October, we're looking for two data related to the economic events. It go from medium to high impact. It's the BCI, not PCI, is a GDP data on October 30, which is Wednesday, and then BCA data, which is a subset of the PCI data, which is a indicator for inflation metric. October 31st, which is Thursday, right there. Thursday. And the Friday gonna fall on November, which is it's gonna be a non-farm payroll. So, all right, that is for economic events. All right, now see what lesson we learned for today. What opportunity that our market provides us today. So here's how we look at the price actions, or at the price action at 8:24 Eastern time right there. So here's what we look, right? We don't trade the market, we just trade what we believe in about the market. And I think we borrowed that saying from Van Toth. Yeah, if you Google Van Toth, you will know that he's a tough psychologist for trading, and that's what his statement right there. We don't trade the markets itself, we trade what we believe in our market. So basically what we what we believe we trade it. So here's what we believe. At 8:20, we take the screenshot, and here's what go through our head. So basically we have a reversal right here, reversal, which is the first leg down, and then we have right here is the retracement, and it go to a little bit consolidation and then boom, expansion, which is a next leg down right there. Yeah, that's the next leg down. That is the next leg down, expansion, right? Next leg down, and then you have retracement, and the next leg down. It kind of small right there. It's not huge like the first two leg, right? You see that the next leg down gonna be the range get a little bit smaller. And look at the magic happen with the third leg, right? And then you have retracement again, and then you see the last leg. I think with the four right there, right? 1, 2, 3, 4. The last leg is huge. It's boom, and it did rate the New York BM section right there, and you can see the pattern right there. It's the first leg down, and it's small leg right there, but it did not. That you see the leg right here, the second leg, it did not, it did not rate the low of this one, so it doesn't count at all. But if you look in terms of the double rate pattern, you see that it happened right here on the third leg. It rate the low of this one, so it's rate one time and rate two times. Right? That's the reason why we give us the term double rate, south-south liquidity right there. So whenever we see the double rate pattern, we know that the market is set for reverse, right? So that it's the sell side, then now it's set to the buy side. So the algo is recessed. It goes to the buy side now. So it's gonna go up. It's gonna rally. So that's the whole idea right there. And this pattern is very reliable. The double rate liquidity in this case is the sell-side liquidity. And last night when we opened the charts, we saw boom and the so this candle up. We're thinking about taking the trade. But we don't see it in our pattern, the reversal pattern. Here's what our reversal pattern we have. Yeah, we trade, so far we trade only these two types of 4 breakout reversal, type 1 and type 2. So basically the type 1 is that you have break and test from below and reverse. That is type 1 right there. And type 2 is test from above, right? And then is break and then reverse. So with that in mind, when we see that last night around 20, the hour of 20 right there, we see that it's not in our playbook, so we're reluctant to take a long position right there. But now we can put into our playbook at the new setup right there. So basically the idea is that whenever we see that the double rate sell side liquidity in this case, or buy side if up here, then you have this phenomenon. Look for the huge swing down, right? That the Judas swing right there. That's the manipulation move right there. Then if you saw the next candle that it failed to break the next candle, then give us an idea to go long right there, and just let it run. You see it go all the way to this fair value gap right there. You see that? All the way to go fair value gap. So basically we can aim at this level. It rated level, or you need to see right here the next candle after the impulse move or the manipulation move right there, the huge down move. That can be good right there, good level right there. So pay attention to the so-called impulse moves, or another word called Judas swing move. Euro swing move and Euro swing move right there. It gives us a lot of clue what the next move the algo gonna make, because look of the following candle give us a lot of clue right there. This blue candle right there, and you see that it failed to broke to the high, and then it broke to the low, right? And then it create this pattern right there. You can see that, and you mark the next candle right there. So it tells you that right there it create a fall breakout, and then boom, the next leg down gonna taking place. Right, the same right here, you have an impulse move right here, and then you look at the candle. It make the fall breakout at the high of that candle. Then boom, it going down right there. For this, the same idea. So it can reverse from here. Alright, so that is our analysis for what we believe at that at 8:30. So exactly it's 8:24 right there. Let's see what next we have in mind at so here that's our understanding or our belief or analysis at 8:30 or 8:24. Let's see at 9:30 what do we have. Actually we have is at 9:41 exactly we start seeing right here. Right here we see a flip right there. But this flip is, you see that the candle is cut in the middle right there. It's like a dozy, but if it be a little bit hammer, right, then it gives us a better. You see right there, a little bit hammer right there hanging there. It's better for a short setup, but it's still a good setup, right? That it will be, you see at the level right there, this level. So it's the London high or the low of the second candle after a big move. That's a critical level right there. So basically it break and it tests from above and it reverse. So that is the type 1 reversal. Let's look at our type 1 reversal right there. You see that? That's called type 1, reversal type 1 right there. Breaks, take from above and reverse. So perfect right there. And it fit with our analysis right here. We see that. We see it's the last, leg, right? We already see the analysis on this side. So basically, you have a last leg expansion to the downside, and then you have retracement right here, and then the retracement into a reversal, and then expansion to the upside. You see that? And then you have a retracement, and then you have expansion right here. Then the next move, it break out of the high right there. Then the next move is gonna be retracement or reversal. As soon as you see the setup, the close, because the close of the 9:15 candle is happening very fast. Yeah, we have to pay attention. So if we want to take the trade rate at 9:30. Then as soon as we saw setup, we have to go in right away. We don't have to go big at all. Just go with one contract, and as soon as we see it rolling down, then we can add more contract, and we add the target right here at this level that can be hit right there, which is right in the mid-range of London right there. But how to see how accurate the algo go back exactly this level. The level that's it rate the south side of query right there, it rate that one and rate one more time before it's reverse. So that's a key level right there. But a little bit tricky to go to a 9:30 also. But we did anticipate, if you anticipate a retracement right here, then you can go short, but have to take a quick profit, because the retracement is for sure the retracement is gonna happen as soon as you see this setup right here. It's a reversal type 1. So the reversal is already there, because we only have two scenarios. right? After we do this analysis, we know that only two possibilities is the retracement or reversal. Either way, it's gonna move down. And the next step for it is to see if this retracement turn into or become a reversal. Look at the ICT price delivery theory with the wheel that we are look at every day. Yeah, so we're gonna look this every day, every time we trade or before trade we do analysis. So basically this is the wheel for price delivery theory right there. It's very crucial because help us to have a expectation what next move gonna make. So basically, so after the expansion, it's gonna go to retracement or reversal. Right there, it will never come back to consolidation. So we only have two possibilities. The first is retracement, and then we're gonna see if the retracement turn into or become reversal. So we know for sure once we see that, we know it's gonna be retracement, so we can short. That's the Hill lesson we learned right there. Let's look right here. Here the recording, the tape right there. You see? Yeah, we right there. Let's see. So this one is, you see that it's supposed to go up. We record a bit late, but before that is let's look at this recording we have. Is it better catch that moment. Yeah, in this recording, we capture the, just ignore the trade right there. We take a long trade. Basically, after we see the algo switch to, buying, so we know that it's gonna go and hit, this high. We should take profit right here because we just try one contract to see how it look. We test the water, but that's it not the point. The point we try to make is that you see right there at 9:15, right? Candle at 9:15 and 6 minutes, 15. So it's gonna be 8 minutes into the candle. It's there, and then it flipped. See, it flipped. Yes, you see that? That flip right there. I mean, forgot about the execution of this trade. We're supposed to put on, a break even and get out of the trade. But the point we try to make is that it flips. So it gives us an idea to formulate. You see that? You go back, and then boom. You see that? That is right here. Stop right here, and that. Yeah. Yes, stop right here. You can see that is the level right there. So it breaks test from above. I think it's 59 right there. So we see the level 59. Oh, right there. So 59 right there. So that gives us an idea that we should short them right there. Yeah, so we should short them right there at 9:30. You see, it's very similar to yesterday, right? Yesterday, it's so obvious. Yesterday, you see that the 9:15 set up the fall breakout, boom. But yesterday is much easier for it to take the trade. You know why? Because it hit the high time frame level, so it's gonna reverse right away. And after the huge rally, it's gonna reverse. But in this scenario, it's right in the range of the PM. So we a little bit hesitate right there, and we also see that it rate the London only one time. So we really hesitant. We wanted to rate a second time, and then boom, you have a double rate liquidity right there. So it's more reliable. But the lesson we learned today, that we don't have to wait for the double rate. As soon as you see the flip from here and the setup right there, the reversal type 1, we can go in. Plus, we already analyzed right here that the reversal, excuses, the retracement already in the place. So take the trade and move our stop loss or take a quick profit and wait to see if the retracement become a reversal. That's the huge lesson for to learn today right there. So every day we learn a lesson. That's our our mission right there. Don't afraid to make mistake, because mistake is where we learn the lesson. So try to experience, because it's the practice account, right? So why don't we try it out, and that's how we learn, right? If we fail, we fall, then we learn. Yeah, so next time we're gonna execute right there. So actually, in this trade, we try to go along right there, but it becomes short, so we didn't take that trade, the short trade, but we watch. You see that? We keep going down right there. And I think we just, you see that as soon as we see it pull back right there, we go along right there. And let's see, wow, yes, the next candle go in and take it out. So that's the second lesson we learned right there. That means that whenever we see a huge pullback and execute down close, then wait for the next candle if you want to go long. If not, then take a short trade and very quick short right there. It may retest the low of this candle. So that's it, and the second lesson we learned right there. This candle very reliable, tell us the short is coming, and the retracement is in place. It's not gonna be a reversal. So this one is another leg down before it completes the retracement. That's the huge lesson we learned, because we want to know if the retracement gonna turn a reversal or not. If it's not gonna turn a reversal, then we know that we're gonna go long, and the next target gonna be the New York PM BM high from the prior day. Otherwise, it's gonna be reversal. That means that we know that it's gonna be a second leg down. So don't go long. So that's the huge right there, and the market told us exactly. Right? You look at yesterday right here. The candle of 9:30. Yesterday at 9:30, it's huge down close right there. It do a little bit rejection right here, but not much. It's still the huge down close right there. That signal to us that this is gonna be a reversal. All of this is just a retracement before make a next leg down. But look at today. Today the 9:30 down close, but it pushed back all the way here, and the next candle it make another down close, but after that you see the reversal. The retracement complete, and the expansion to the upside continue. So expansion, retracement, and then expansion, retracement. So it moved it up and it hit the target, which is the New York PM from prior day right there. It's different from this one. You see that? This one is the reversal. It's not just a retracement and then a continue to rally. No, it's reversal. So that's the huge lesson we learn. The market will tell us whether this is gonna be reversal or it's gonna be just a retracement. It tells exactly today. And then it tells us one more thing, the story right here. Look at that. Look at the 9:15, at the 9:15 right there. If the virus NIF 15 are dozy and hammer like that, then the 9:30 is gonna be huge and it's gonna be a reversal. But if the 9:15 curve like this, and then looking for 9:30 go down, but we have to take quick profits and get out and get ready to to go long, because this is just a retracement. It will not turn to a reversal. You see that? That's a huge two lesson we learn. Beautiful. You cannot ask for a better setup like this. Market tell you exactly what to do. We learn a huge lesson. And whenever you see this candle hammer and the inversion like that, then go long. The low hanging fruit is going to be the target, the high of the candle. You see that? After I break the candle, it's going to be retracement. And then boom, make the next leg up right there. So we'll learn a last lesson similar. You see right here, yesterday we did make a mistake right here. After the up close, and you see the hammer candle right there, don't go long. It's short. You short them and aim for at least the low of the candle or the low of the candle. The same story right here. When you see that, you aim a little bit different right here. You don't aim for the low because it's going to be too much. You aim for the key level that the candle touch them or tap them or retest them right there. Then it hit right there and then it reverse. That's the lesson we done. You say, will we aim at this level? There here, that candle also hit that level right there. That's another lesson we learn. And another lesson we see right there, right here, you see the pattern? Retracement and then boom, boom, 1, 2, 3, reverse. Right there. 1, 2, 3, finish retracement and then another expansion move right there. See, 1, 2, 3. And then expansion move right there. So right here we have the huge setup right here. Also, you see that breaks that from below and then boom, reverse. But a little bit tough right here. You have to put a stop loss below at the level, otherwise it will stop you out. That's another lesson we learn right there. Okay, let's see the trade we took right here. When we go long, you see that we aim exactly at the, not exactly, but around the right here. But right here we little bit chicken out. We take our profits right here. It will let it run. It gonna hit right there, and then we make mistake right here. We try to short them, but this just a retracement. But we switch too long, and it did hit that target beautifully. Let's watch that trade, and then we can wrap up right here. So let's keep in mind that we did go long, right? We did go long. We made mistake. We after this candle retrace, we go long. That's too early, and it needs to do one more flush. That's the lesson we learn. Whenever we see this retrace back, it's gonna make one more flush. Identify level, you're gonna flush touch that level before it start expansion, right? You need to finish the retracement. You need to finish. You see that it touched that level exactly, and then it finish the retracement. So we go a little bit too early. That we got stop out right there. Then look at the next trade we're going. After this finish, we know we're going. We're going right away. Let's look at that trade. Okay, so right there. So we got start out, right? And then the next trade is right here. All right, so we go in right away. You see that? We go in with one contract right there. Well, because we know from analysis that, how do we know? We don't even see the setup yet, right? You don't see the reversal, which is break, test from below and reverse. We don't see it yet, right? Our setup right here. You need to see break, test from below and going. The reason when we go in early is because from this analysis, we know that it's gonna be retracement. And how do we know that? And it can be turned into reversal also, but we eliminate the possibility that it turn into a reversal. It can only be retracement, because you know why? Because of this candle. This candle tells us that it will never be a reversal. Why? Because look at the other day. When you want it to be a reversal, it have to be like this. You don't want to see it push back all the way this. Right? That's the signal. But here the lesson we learned for today. Don't go long too early, even though it gives you a signal, but you have to wait for the last flush. Definitely, yes, that's right. You have to wait for the last another confirmation for that matter. But however, if you want to go short right here, you have to take a quick profit, because this is a last flush. It will never go down more than that. That is a huge lesson right there. Yes, that's right. Last flush which will go in right here. We're so confident we'll in right there. We don't even wait for the setup, right? If we wait for the next candle, then sure, you see that? The next candle is so perfect, you see that? Break, test from below at this level, right here, this key level right there, from the break from the previous day right there, the reversal move. You see that? Breaks, test from below, and then you go in and, go in and go long, because that reversal type one right there. Breaks, test from below, and then reverse right here. As that's our playbook right there. Breaks, take from below, right? That's the textbook entry. But in this case, we entry early. The candle before that, one candle early. And let's see what happened to us when we try to go in early. Wow. You know what we thought at that moment? We say, wow, perfect. So the decision to go in early is pay off. You see that? We're so confident that we add 10 contract right away, and it go up 2,000 right away. But we learned the lesson. If we go too fast at that, we have to take a profit right away. Just take out take out the profits and only leave one side left. And let's see what happened. Wow, at one point you see that it go up to 3,000 right there. That's a huge profit. I mean, just look at that. Yeah, see that? Huge profits. Who would thought that it go all the way and turn into this candle? It's scary, right? That's the reason why going big side, we have to be careful, because it really tests our conviction. If you don't have a conviction, when it go back against you, you will have a tough time to stay in the trade. See that? I mean, what do you think? From 3,000 and go back to a loss. I mean, how do you stay through that? To a lot 500. I mean, how do you stay in the trade? That's a tough. Put the look at that we are not in front of our computer at that moment. I think if we are in front of our computer, we may exit the trade because we got scared right there. From 3,000 and lost, back to 500. But that provides a very huge lesson. You have to trust your setup. You have to trust your conviction. All right, and if you decide to go early, then you have to pay the price to sit through the fluctuation right there. Yep, it is part of the trade. It's not easy. It's simple, but it's not easy. That's someone say that right there, and it's true. And right there, we sit on pin and needle right there. For lack of a better way, the way we crap on our pen right there. Yeah, I mean, look at that. That's the reason why we have to test and try, give us ourselves room to learn, to make mistakes, to have fun. Otherwise, if we don't go through all experience, there's no way we can build a top mental game for the future. You see that? From 3,000, go back to all the way right there. But at that moment, we say, wow, it's still a good setup, now perfect. Now it breaks that from below and it's going to reverse. And that's what we believe, and we decide to stay in the trade. And perfect, it turned out to be our setup right there. So that's the reason why we have to practice and build the conviction, build the belief. Otherwise, we're going to exit the trade right there. I mean, who's going to stay in a trade when you give up 3,000 again and then give back and get back a 500 loss if you don't have conviction right there, you know that that's the setup, break, test from below and reverse right here, perfect. That's from perfect. We know that it's gonna work every time. So that's the reason why we stay in the trade. Wow, it come back again. It scares us right there. We down again, say, wow, I really, and now go to loss almost $1,000. Are we really right here? Yes, the market tests us right there. That's the hill lesson right there. The market tests our conviction, tests our resolve. You see right there? I mean, be honest right there, from 3,000 again to 1,200 loss. And boom, you see that? Boom. It going, it tests our result again. Man, look at that. Looks so scary, right? But that's where the beauty comes in. You have to go to the pen, to get the pleasure. You have to go to the pen, and then you see the test again. It's very rough right here to go along right there. But we have to stick to our game plan and get our setup, right? It's still valid. Boom, boom, there. Yes, so right here we go up to 4,000. And now we look back, we see we should take profits right here. Take the profit 10 contract out, let one run. Right, because it's half our journey right there. You see that? Yeah, but let's see. We didn't. And let's see, boom, 5,000 right there. We should take profits right there and let one contract run, because we look at this number, we get greedy, we say, oh, let it run. And here's the happen. But anyway, we're glad we tried out. So we learned the lesson. Wow, you see that? So we give back, from 5,000 back to 3,000. And now we start get nervous again. You see that? Boom. So we take profit right here. We take profit right here, my friend. We said that's enough. We don't have so much to, we take 4,000 right there. We don't have so much to go through it again. Because we thought, okay, maybe a double top right here. It fell to break levels, so it's gonna reversal. That's what we have in mind. But it turned out it's not a reversal, it's a retracement. And we make mistake right here. We instead of wait for the retracement completion and go long again, we thought it's going to be turned into a reversal. So we try short them. And right there. We try short them. And we make a mistake right here. If we short them, then just go with only one contract. Don't try to go big. Right here we thought it go into our end. I think we did increase the size. Let it go to the next video. We're gonna see that. Yes, so we continue that video right there, and we add the sign. We thought, oh man, it goes to our go to our direction, and we're thinking about short rate. We're thinking about close the trade, but we did make a fast decision, and we pay the price. Is we very hesitant right there, and we paid the price right there. You see that? It come back again us, and it's too late. We need to get out of there, but we, as soon as you see that, you need to go close and say, oh, maybe we still have hope, and we short again, and now we switch to long. We know that the retracement it end, so we go long. Yes, I think we go short again, and we'll go long, and we move to our original target right there, and it hit our targets. Beautiful right there. But look right here. Look at the original trade. Remember, we go long right here. If we stay in last trade and go through this retracement, we're gonna hit that target 8,000 right there. To look at the trade right. You remember the trade we go in right here? Yes, just stay in this trade and go sit through the retracement. We make mistake right here. It's retracement right here. Right, just stay in this retracement. We're gonna hit that level 59.09 right there. It will hit, because its retracement will not hit our stop. I mean, break even right here. Break even at, is that break even? Yes, our break even at 94. So look at that. 94. Let's go back to that. Yeah, let's get the 94, right? 94, and you see that it did not hit the low of this. It will not hit 97. We 94 down here. So if we stay in our original trade, the target up there will hit the 59, 9 or 10 right there. So either way, we learn the lesson that when you stay in the trade, it goes to direction. Just, you either take the profits and then going again, don't switch position. So that's the whole thing we learn right there. See that? That's the good right there. Anyway, we run out of time, and thank you for your time and interest. Grateful for this opportunity. We do what we love, then success is coming our way. Day by day, little by little, in every way, we're getting better and better. All right, have a great evening, great weekend, and see you next week. Bye for now.